If you're new to the stock market and have no background in finance, some terms are probably still unfamiliar to you. You hear all these people say stuff like ETFs and index funds, and you think to yourself, what do these things even mean? Ultimately, we can get all pretty frustrated when we're hit with the things we don't understand. It's like trying to do math homework without getting the lessons first. It's not very ideal and would pretty much be wasting our time. Before you hop on the roller coaster ride of investing, you need to know most, if not all, of the terminologies used in the stock market, which is why we're going to introduce and break them down to you in simple words. Some stock market terminologies can be quite a challenge to grasp, but most of them are actually way less complicated than they sound, so fear not, as we've got your back. Pretty soon you'll be spitting out stock market terminologies yourself in no time. Hey, welcome to Stock Market Mate. Today we'll talk about the top 30 stock market terminologies you need to know. Before we get into it, subscribe to the channel and hit that notification bell to help us beat the YouTube algorithm. If you're done with that, then let's get right into it. There are probably about 100 stock market jargons used by people, and that's way too many to cover in one video. However, we've come up with a list of at least 30 terminologies you might find interesting to learn about, including the most basic terms to the least common ones. 30. Junk bond. Counting down from number 30, we have a junk bond. This is referred to as the highly risky bond. They are risky investments that offer higher returns but have a higher default rate. Most of the time, junk bonds are a bad idea, but there are investors that take such a risk. 29. Growth stock. Growth stocks refer to companies highly expected to increase sales and earnings at a faster rate than the average. A strategy in which many wealthy investors often do is invest in rapidly growing stocks. Examples of growing stocks include Amazon and Netflix. 28. Fixed income. A fixed income refers to an investment wherein the borrower of money is issued to make payments on a fixed schedule with a fixed amount of money. They're also commonly known as bonds. 27. Hedge fund. A hedge fund is a gathered investment fund trading in liquid assets. It makes use of more complex trading, portfolio construction, and risk management strategies intending to improve performance. This is a strategy used mostly by rich investors who are hoping to beat the market. 26. S&P 500. Next, we have this thing called S&P 500. This term stands for Standard & Poor's 500, and they are initially a list of 500 publicly traded US companies. Investors consider it as the best overall way to gauge stock market performance in the US. 25. Initial public offering or IPO. Then we have the term IPO or initial public offering. It is the process of offering shares from a private corporation to the public in a new stock issue. Individual investors who get in on IPOs are usually long-term, established, and often high net worth clients. 24. Index. In simpler terms, the word index means indicator of the market. An example of this is the S&P 500. Stock and bond market indices are composed of hypothetical securities representing a particular market or segment of a market. 23. NASDAQ. NASDAQ stands for National Association of Securities Dealers Automated Quotations. It is a worldwide electronic marketplace intended for buying and selling securities. This can be known as a computerized stock exchange or tech stocks. Tech companies included are Apple, Microsoft, Google, etc. 22. Asset allocation. Asset allocation, or also known as asset mix, refers to the balance between stocks and bonds. It's a process of deciding where to place your money to work in the stock market according to your goals and investment horizon. This is an important strategy as it makes the setup of your investment portfolio. 21. Time horizon. Time horizon means the period of time in which an individual plans to hold an investment for a specific goal. Investment portfolios can be built more aggressively or with greater risk the longer the investor's time horizon is. 20. Prospectus. A prospectus is a document containing details about an investment offering that is required by and filed with the Securities and Exchange Commission. Among other things, a prospectus is filed with an offering of bonds, stocks, or mutual funds. When investing, you should always look at a company's prospectus first. 19. Stock. Then of course we have the word stock. It simply means a portion of a company. If you buy one stock in a company, it means you own a portion of the company. Stock is also known as equity. 18. Weighted average market capitalization. This particular long title refers to a type of market index in which each component is weighted according to the size of its total market capitalization. What this means in simple terms is that the larger the company, the larger the score. It's not often used in the stock market as well, but it does make an appearance here and there every once in a while, so make sure to still take note of what it means. Number 17. Ticker symbol. This is basically the symbol of a stock. Ticker symbols are symbols depicting specific assets or securities that are traded on stock exchanges or listed in a public market. For example, Apple Inc.'s ticker symbol is AAPL. 16. Quarterly earnings. These are the earnings of a company gained per quarter. Publicly traded companies release 4 quarterly reports annually, since there are 4 quarters in a year. Throughout the year, companies and investors alike use quarterly financial reports to track financial results and business developments. Number 15. REIT. Companies specializing in owning and financing income-producing real estate are known as real estate investment trusts. This allows one to invest in real estate despite the lack of mortgage and property. Number 14. Risk versus return. While risk refers to the possibility of a loss, return refers to how much money you will make above your initial investment. As a result, a higher risk investment must offer greater returns to compensate for the chances of losing money in a successful marketplace. Number 13. Portfolio. A portfolio is the collection of investments that an individual holds. It contains an investor's financial assets such as bonds, cash, and cash equivalents. You may hold an investment portfolio yourself or may have an investment portfolio managed by a financial professional or financial institution. The design of a portfolio is generally based on the risk tolerance, time frame, and investment objectives of each investor. Number 12. Option. In options, 2 parties agree to trade an asset at a specified price before a future date through a derivative financial instrument. To put it simply, it is a contractual agreement between 2 parties to buy and sell stock. Option trading is usually hard, so individual investors might be better off sticking to mutual and index funds. Number 11. NYSE. NYSE stands for New York Stock Exchange, and it is one of the world's leading markets for securities and other exchange-traded investments. The NYSE serves as a central marketplace where investors can buy and sell stocks, as well as offer companies an opportunity to list their stocks and raise money from investors. Number 10. Volatility. From the word itself, meaning rapid changes and unpredictability of something, it is used to refer to how quickly a stock's price increases or decreases over time. In other words, it is the ever-changing ways of the stock market. Number 9. Mutual fund. A mutual fund is a company that gathers money from many people and invests it in stocks, bonds, or other assets. When you start investing, it's actually much better for you to invest in a large pool of funds such as this instead of selecting certain stocks. Number 8. Long-term investing. Long-term investments are ideal for any investors. It's basically buying a stock and holding or keeping it in the market instead of selling it. This is a strategy that most successful investors use, so make sure to keep this one in mind. Number 7. Key Performance Indicator. It is also known as KPI. Key Performance Indicator is a company's long-term growth. KPIs indicate the level of success of an organization or of a particular activity it undertakes. By keeping objectives at the forefront of decision-making, KPIs are crucial to business objectives. Number 6. ETF. An ETF stands for Exchange Traded Funds. They contain securities as well as shares that are made to be sold on an exchange. The way to earn from money through ETFs is basically similar to how one earns by investing in mutual funds, as they are operated in quite the same way. Number 5. Individual Retirement Account or IRA. This is an investment account for retirement savings. It basically allows you to save money for retirement in a tax-advantaged way. Number 4. XRT or X-Rights. This is not really a commonly used term in the stock market, but in case you happen to stumble upon this word, it simply refers to shares of a stock that are trading but have no rights attached. When we say a right, we're talking about the ability to purchase additional shares at a set price in the context of a new issue or offering. Number 3. Yield. You probably heard this word in a different context, but in the stock market, yield means the income returned on an investment. In other words, it is how much your capital is earning each year. In most cases, it would refer to payments received by investors on bonds or stock dividends. Number 2. Diversification. From the word diversify, diversification is the spreading of your assets. Diversification is the process of allocating capital in a way that decreases the exposure to any particular risk. Number 1. Uptick. And number 1 in our list is the term uptick. An uptick, like its traditional meaning, refers to a slight increase. In this case, it indicates that a financial instrument's value has increased since its previous transaction. During an uptick, a security's price rises compared to its last tick or trade. Finally, we've made it through our list of 30 stock market terminologies. These are just some of the words used in the stock market, but there are actually so much more we haven't had enough time to mention. Nonetheless, we hope we were able to help you learn more about the language in the stock market, as well as make you understand the intriguing terms in the world of finance. Well, that's about it for today. If you found this video helpful, kindly click the like and subscribe button. Also, you might want to leave a comment below. We love hearing from you. Thank you for watching, and we'll see you in the next video. If you enjoyed this video, you're going to want to watch one of these 2 videos right here. Enjoy!